Hello, everyone, and welcome to Milkshakes Markets and Madness. This is a show where we talk about the financial markets. We talk about the madness of the world surrounding those markets. And we do that through the lens of the dollar milkshake theory, which is something I came up with 4, 5, 6 years ago now to kind of help me understand and think through the mechanics of the monetary system and how they may react if we were to enter a debt crisis. My name is Brent Johnson. I've got a firm called Santiago Capital. And we've been doing this show for almost 2 years now. And as you know, we've kind of recently changed the format and we've been switching it around a little bit. And what you're going to get today is really just me talking because it was kind of a slow week. It's the last week of August, kind of the end of summer here. Markets, for the most part, were pretty quiet. So not a whole lot happened, but I still wanted to get together and, do a show and kind of tell you what I'm thinking. And I've kind of got mixed emotions here, or mixed thoughts, because for the most part, markets have performed incredibly well. We had a scare about 3 or 4 weeks ago when we had kind of some negative headlines come out post the Fed meeting. Markets sold off, and it was kind of exacerbated by the Japanese yen strengthening on the back of the Bank of Japan raising interest rates. And that caused about a 2 or 3 week kind of little mini sell-off. Markets then very hardly rebounded or rebounded very hard. And now they're really kind of back up at their highs. They're not quite back up to their highs, but they're pretty close. And so the things that are on my mind is that, we had a little bit of a scare. So we saw something that we hadn't seen for a while, and that is that markets can actually go down. But what we also saw was that the bull is hard to kill. And now we're entering into September, and September and October are traditionally, just from a seasonality perspective, fairly difficult time for the markets. Some of it has to do with liquidity. Some of it has to do with, who knows what. It's just kind of a historical pattern. But whenever there's been kind of big crisis, it always seems to kind of happen in the fall. Now, that doesn't mean that we're going to have a crisis this year. It doesn't mean that, we need to have down markets. It just means that I don't think that when something happens, not regularly is not necessarily the way to say it, but often, it's something that can't be ignored. And when you combine that with everything else that's going on, as you know, and what I've said, for the last several weeks now, is I think September is going to be extremely volatile, and I still think that that is the case. So even though we finished August on somewhat of a high note and a very calm note, the VIX is back down to 15. I don't expect that to last, and I think the first 2 or 3 weeks of September, heading up into the next Fed meeting, which will be September 18th, could be extremely volatile. And when I say volatile, it could go in both directions. But I don't think that we're going to have a calm market for the next 2 or 3 weeks. We'll see. But where we're at right now is, the gold closed the month above 2,500. I think that is the first monthly closing above 2,500 in history. I haven't really gone and looked at that yet, but I'm pretty sure that that is the case. But it was at 25 a couple days ago, and then had not a hard sell-off, but a fairly strong sell-off over the last couple of days. Silver the same. Silver was testing 30 again, and I think it closed around 28 or 28.50 or somewhere around there. The equity market's kind of the same. They kind of were touching up against the highs earlier in the week, and now they pulled back a little bit. So nothing closed the week on a really strong down note, but they didn't close at their highs either. And so what's interesting to me about gold is, closing 2,500 above the month, that's sort of a bullish signal. But when I look at the positioning and the sentiment is not extreme, but it's high. And we've talked about sentiment before. But sentiment in the dollar, which is kind of its inverse, is extremely low. It's not totally extreme, but it's very, very low. The sentiment in the dollar is about as low this week as it was, other than in the summer of 2021. It's about as low as it has been. And I got more comments this week, people on Twitter or in my DM saying, oh, the milkshake is over. The dollar's going to fall. There's nothing that the U.S. can do about it. Jerome threw in the towel, et cetera, et cetera, et cetera. Saying that now the dollar is going to fall precipitously. And listen, maybe that's possible. I can't rule that out. But what I found was interesting is kind of at the height of all those, the dollar then kind of bounced for the last couple of days. And so when you have things that are at their extremes sentiment-wise, you often will get a reversal for at least a bounce. And so I actually think we could get a bounce in the dollar over the next couple of weeks. That would put pressure on precious metals and put some pressure on some equities, perhaps provide a tailwind for the VIX to rise again. So that's part of the reason that I am expecting a little bit of volatility in the months ahead or in the weeks ahead, because the dollar rising typically corresponds with higher volatility. But the other thing about gold is I was looking at the positioning just before starting this recording, and we've talked before about the different indicators that I look at, and all of them, or any of them in isolation, don't really mean a lot. But when you put them all together, they start to tell a story. Positioning right now is about as extreme as it has been any time other than a couple years ago, kind of in the highs of COVID. And so what that means is everything is positioned very bullishly. And right now, the gold COT report shows over 300,000 contracts net short by the commercials. The commercials are the banks. They're taking the other side of speculators. Now, I've been doing this for a long time now, and I've never seen the commercials have to cover into a bull market. Now, if the commercials would have to cover, that would be extreme. With gold at an all-time high, that could send gold much, much higher. But typically what happens when you get to these extremes, and what historically has happened, is you get a reversal. And all I have to do is point, if anybody looks at this stuff, go back and look at the copper chart and the copper positioning from the middle of May. And back in the middle of May, I sent out a tweet with the copper chart, saying, is it different this time or will history repeat? Showing the copper COT report from the middle of May looks almost identical to the gold COT chart right now. And my point is, it doesn't necessarily mean that gold has to have a pullback. But if gold doesn't have a pullback, then that means the banks that are taking the other side of it would be very offsides. And that just typically doesn't happen. And so if you look and see, and I was telling people this is the same thing about copper back in May, and everybody was saying, no, fiat's over with, buy hard assets, it's going higher. Well, since then, copper's down about 20%, 20 to 25% since that chart that was sent out in the middle of May. So again, I'm not saying to go out and sell all your gold. I'm not saying you shouldn't own gold. I'm just saying, when I look at that, that gives me concern, and it makes me think that we are probably due for a pullback, especially when you consider the sentiment on the dollar taking the other side. So that's my thoughts there. With regard to equities, I have said this many times over the year to date, is that I'm expecting volatility leading into the election. We had a very good couple weeks at the end of July and first part of August. We've kind of just been going sideways since then. I'm sorry, we've had a rebound since then, but I'm expecting more downside in the equity markets over the next couple weeks and probably into the next couple months. I would love to have a hard sell-off, because I think that would probably be a good buying opportunity, but we'll just have to wait and see how that plays out. You guys have heard me talk about my friend Todd, who I personally, he's probably the best money manager that I know, and he just never loses money, at least not for very long. And he told me today, he said, we're going into September, and I've lost money in every September for the last 10 years. So that's something else. And he said, listen, seasonality is a real thing. You got to be careful. And whether it has to do with quarterly tax payments from the corporations, or the fiscal year end for the U.S. government, or whatever it is, oftentimes September we'll see a slight lack of liquidity, and that can cause some excitement in the markets. One of the other things I thought I would talk about this week is I sent a chart out earlier this week showing the Chinese holdings of U.S. Treasuries. And this chart has gone around several times over the last couple of years. And the same chart, showing Saudi Arabia's holdings, and just showing foreign holders in general, showing the price of, or showing the holdings of foreign holders of long-term Treasuries decreasing. And this is often used as an example or exhibit A of the rest of the world is de-dollarizing. They're no longer going to buy treasuries. They're going to sell all their treasuries. And that's going to be it for the US and the US dollar. And if you look at the holdings on this chart, and then if you look at the price of the 30-year bond and you look at the price of the 10-year bond, the treasury bonds, you'll see that these three lines are very, very highly correlated. When the bond price goes down, it shows China's holdings going down. When the bond price rises, it shows China's bond allocation increasing. So here's the thing. Everybody tells me that China is just selling all their treasury bonds. Well, if they're selling all their treasury bonds and they're not buying any, then how is the chart going higher on those periods of time when it goes higher? If they're only selling and not buying, how does the chart not just show a straight line lower? Not only that, but do you really think China is day trading their treasury position and are so good at it that every time the treasury bond price rises, they just happen to buy at the low? And then every time treasury bonds roll over and the price starts to fall, they just happen to sell right at the top? The point I'm getting at is that the chart that often is used to show that China is selling their treasury bonds does not reflect sales only. Sales are included in this, but it also reflects a change in value of the bonds that China holds. And this has come up 2 or 3 times over the last couple of years, and it always sparks a big debate. And many people will say, no, it is sales. And then I and a couple of people say, no, it's reflecting current market value. Well, this came up again this week and went back and forth with a couple of people on Twitter. You can go find my Twitter stream and kind of look at this. And people were adamant that it's reflecting sales and that the chart is reflecting holdings, not market value, but holdings. And the reality is, and I know this because if you look at the chart on Bloomberg and you look at the source will take you to the Treasury Department's website. And if you look through the footnotes on the Treasury Department's website of how they create this chart, it very clearly states that it is based on current market values. Now, there has been some changes from time to time to this data series that the Treasury gets, but it doesn't change the fact that there are sales included in there, but that the holdings that are reported, the current holdings, are reported at current market value. They are not showing the face value of the bond. So it is not a chart of holdings, it's a chart of the value of the holdings. And again, I got a lot of pushback on this, and I basically showed them on the website where it says it's current market value. And then I also, a couple of years ago, or a year and a half ago, I called and spoke to the Treasury on 3 different occasions, confirming that this chart does in fact represent current market value, not nominal value, not face value. And I have an email from the Treasury that says, Brent, we confirm you are correct. This is showing current market values. Now, I'm not bringing this up to say, look, Brent is right. I'm bringing this up to show when you see a chart, if you see a chart and it says that it's face value, you have to do your own little research to make sure that it actually is face value. In other words, don't read everything, don't believe everything you read on the internet. Sometimes it takes a little bit more digging and a little bit of more of thinking about what you're looking at, whether it makes sense or not. And if it doesn't make sense, then dig even more. The other thing that I'll say is that when I spoke to the Treasury Department about this, even though they now also report sales, and sales are supposed to be divided out separately from a change in value of the current holding, the Treasury Department, at the time I spoke to them, which I think, I don't know, maybe 9 months ago, a year ago, they were not highly confident that the people that are responding to the surveys, in other words, the people that are sending in this information, that the Treasury Department then, compiles and puts out on a chart, they were not highly confident that they were being reported on correctly. In other words, they were saying sometimes the things that are getting reported as sales may very well just be a change in valuation. In any case, I just bring that up because that happened again this week. I know many of you follow this stuff as well. And so keep that in mind when you're looking at these charts. And when somebody starts making the case of something, it doesn't mean that you should automatically ignore whatever chart that they're using. But what it means is you shouldn't always just accept it as 100% accurate either. So that was one thing that I was thinking about this week. One of the other things that I was thinking about, just kind of the madness of everything that is kind of leading up to the election. And, in my opinion, I don't think anybody's going to change their mind much over the next month or two as we lead into the election, whether they're going to vote for Donald Trump, whether they're going to vote for Kamala Harris. To me, the sides are probably pretty well drawn. I really don't think anybody's going to make a big switch, but perhaps there's some people at the margin. And as a result, over the next couple of weeks, we're going to see a lot of different, attack ads, and he said this or she said that, or he didn't do this or she lied about that. But I just kind of found funny, some of the stuff that went on this week. One of them was that, Kamala Harris has not done an interview since, getting the nomination. And it's been like, I don't know, or since Biden stepped out of the race. And it's been like a month. And so she finally did it. And the thing is, it's kind of she could potentially be the first woman president. And that's a great thing. It's a great thing to potentially have a woman be president. I have no problem with a woman being president, but I thought it was really, to me, it hurt her brand, so to speak, or it hurt the woman's movement that, she brought Tim Walz with her for the first interview. Like, why would you bring your male running mate when you are trying to become the first female president? So I thought that was kind of funny. And the other thing is, I've actually met Kamala Harris a couple of times. My wife's met her a couple of times. When we lived in San Francisco, some of our friends knew her, and so we would be at a couple of different events when she was there. And I have to say, I'm not a fan, but she has maneuvered herself throughout her career, and she is within spitting distance of the White House. So whatever you think of her, and whether you like her or you don't like her, she could become the next president. So you have to kind of factor that in to your thinking when you look at the world, when you look at markets, when you look at how things may develop from here. Now, the other thing that I thought was kind of funny, not funny, but that caught my attention this week, again, from politics, is Trump. Of course, Trump is always doing something that just drives people crazy, right? Well, the first thing that happened with him this week was that RFK, Robert Kennedy, kind of suspended his campaign and then endorsed Trump and is going to support him now. Tulsi Gabbard wasn't running this year, but she came out and supported Trump. So you have a couple people who are traditionally Democrats that are now, supporting Trump. But part of the reason that sometimes people have been hesitant to support Trump because he's Trump. He does so many things that just piss people off. And it's something again happened this week, which it was for the memorial service for some of the soldiers that were killed in the withdrawal from Afghanistan, and he was at Arlington National Cemetery. And I didn't know this, but apparently there's some rule that you cannot use pictures taken in Arlington Cemetery for political campaigns and stuff. And so, listen, that kind of makes sense, right? You don't want to use the most holy ground for the American government as some kind of a political tool. And apparently Trump's campaign, had a camera there and was taking pictures, and, that was very much frowned upon, and it became this big deal. And even the Army came out and said, that shouldn't happen. We don't like that. And listen, I tend to agree. Like, if that's the rule, then he shouldn't do it. But of course, there's always a but. Immediately, as soon as this little scandal started to erupt, is that all of a sudden there was pictures of Biden at Arlington Cemetery used for a political ad from a couple years ago. And so I guess my point is this: is that both sides will do whatever it takes to get into the White House, and every sin that's committed by the Republicans is committed by the Democrats, and every sin that's committed by the Democrats is committed by the Republicans. And at least this is my take on it. So to kind of see this start to blow up, I think this is the start of it getting even more so. I think this type of thing is probably going to increase. And the other thing that I would say about Donald Trump, and this show is not meant to focus on Donald Trump, and I feel like Donald Trump is one of these guys. If you don't absolutely hate him, then everybody assumes that you love him. It's kind of like Bitcoin. If you don't absolutely love Bitcoin, then everybody thinks you hate Bitcoin. So it's a very polarizing issue. And whether you like Trump or not, whether you think his policies are good or not, whether you think he would be good for the country or bad for the country, there is no denying that a huge part of the population wants him to be president. And I think it's really interesting, especially for me, because I grew up in the rural Midwest, where quite frankly, Trump has a lot of support, and I know how people that live there think, and I know what they believe in and what they think is the right thing. And I know that many of them are going to vote for Trump. What I find funny about it is that when I was growing up, he would have been the last person any of these people wanted to vote for. But, times change. And, not only has the Republican Party changed a lot over that time period, the Democratic Party has changed a lot over that time period. And Trump, I think if he does win, and I don't know if he will win. In 2016, I predicted he would win, and he did. In 2020, I predicted he would win, and he didn't. And this year, I just really don't know. It won't surprise me at all if he does. It won't surprise me if he doesn't. But if he wins, I think he has a chance. Now, this is going to be the hot take. I'm just telling you, this is going to be the hot take for the week. And I know I'm going to get, crucified in some cases for saying this, but I am personally not a fan of Donald Trump. I would not choose for my son to model himself after Donald Trump. And I'm going to tell you why. But that doesn't change the fact that he has the opportunity to go down in history as a great president. Now, it could be great for reasons you don't agree with, but he has that type of following. And, to go down in history as a great man or a great leader or a great whatever, you have to have certain qualities about you. And like it or not, Donald Trump has it. Now, here's the thing. There's a famous quote from, I'm pretty sure it's Winston Churchill. And he said, "Good and great are very rarely found in the same man." And I think that kind of sums up Trump. And so my point is Trump has the qualities to give him the potential to go down in history as a great man. The problem is I don't think he has the qualities to go down in history as a good man. And as Churchill said, that's pretty rare anyway. And so, I think a lot of his character flaws keep him from being considered a good person, but it doesn't mean he can't, if he gets into office, achieve some great things. And so that's kind of my take on Trump. That's kind of my hot take for the week. Who knows what's going to happen? I don't vote, and even if I wanted to, I'm not allowed to vote from Puerto Rico anyway. But I think as we lead into the election over the next 2 or 3 months, I think things are going to get increasingly volatile. I think we're going to hear more stuff about how bad Trump is. We're going to hear more stuff about how great Trump is. We're going to hear more about how bad Kamala is. We're going to hear more about how great she is. And so, what that leads to, I don't know. But I have a hard time seeing how either side accepts the outcome of the election if it goes against them. And so I think that's something that we need to consider as we move into the election, and especially probably the first couple months after the election. Okay, that's it. It's kind of a short show this week, but I wanted to get out there, say hello to everybody, give them a little recap, give them some stuff to think about, and we'll be back next week, and we'll see if we have something exciting to report. All right, have a great one. Enjoy your weekend.